Welcome, and I'm honored to be with you guys on this panel, and I'm really happy that all the panels so far have kind of gravitated down to narrative in some way, shape, or form, and we have the panel that actually dives deep into kind of the role of narrative in the space that we're in the current situation that we're in the market. And I guess I'll kick off with my first question, which is, we know that markets often move on perception almost more than fundamentals, right? It's a really important factor. And I want to know, in your opinion, how much does the narrative aspect of it truly influence like institutional confidence in digital assets in our space? Yeah, Gaurav, if you want to kick off.
So should we do introductions in case you missed, or dive straight in?
Absolutely.
My last moderator yesterday also missed it, so I'm just reminding. Guys, Gaurav, I'll keep the introduction fixed to DATS. I'm building a multi-asset digital asset treasury, which is a NASDAQ traded company. I'll answer your question with a short story that's almost like ours. Like every other DAT, we started with like, we'll build the DAT, I'll be probably somewhere at the back, or the chairman, not the face of it. And that was sort of the narrative 3 months ago. Like, people were surprised when you say, oh, I'll be the CEO of the DAT. And slowly we started talking to bigger bankers, larger investors, institutions, and everybody started pitching me the idea of going out, talking, because they said, we have a CMO of Bitcoin, Michael Saylor. We have the CMO of Ethereum today, Tom Lee. There has to be a CMO of altcoins or whatever you're doing. So they need a megaphone. And so I started to understand that Wall Street and larger institutions do take distribution and voice, which is narrative as per your question, as an important index of success. And so, of course, that's a validation to your question that market narratives and storytelling does add to your credibility, does add to your investability, and adds to your investor confidence.
Amazing. And Loren and William, I'll obviously let you introduce yourselves. And then
great to meet everyone. My name is William. I'm the CEO of Altuva Group. We are a NASDAQ vehicle that's buying, where our strategy is to buy public companies that are trading at a big discount in the market. And then after we buy them, we actually go in, monetize their assets and capital that's trapped on the balance sheet, and then use that to then buy Bitcoin. I think to answer your question, look, I think narratives are incredibly important, right? And I think if we've seen anything in the last 12 months, everyone has a different narrative. Everyone's looking at effectively different things. I think there is very, very different ways in which different type of institutions think about different things, and different parties think about things. There are obviously groups that tend to be more sentiment-driven, and there are also, I would say, to your question, right, on the institutional side, I would say generally they tend to be a bit more fundamental driven, but it really, really depends on the detail, right, and who you're talking to. So look, I think that you can go into a lot of detail here, but I think institutions, they generally are slower. They tend to be a bit more fundamental driven, in my mind. They'll spend a bit of time. There is obviously a narrative that you need to convey to them to get them involved, but that is a little bit of different beast versus obviously the other parts of the market.
Awesome. Loren, yeah.
Yep, thanks for having me. Great to be here. So my name is Loren Asmus. I lead capital formation and investor relations for UTXO management. We're a global asset manager focused specifically on the Bitcoin space. We're the sister company to Bitcoin conference. We just had our MENA conference the last 2 days here. Had a fantastic experience in Abu Dhabi, as well as Bitcoin Magazine. And so we've done a lot within the Bitcoin treasury space. We're one of the first investors in MetaPlanet in Japan, which really kicked off this whole DAT ecosystem that we see today. I agree with everything that was said here in terms of visibility, narrative, and you've really seen over the last year or so on social media, on X, other platforms, the groups that are very good at articulating their value proposition as a Bitcoin treasury company have been the most successful, and the ones that have been consistent with their messaging have been the most successful. I think that's really what the market and the ecosystem looks for is, one, are you being consistent with what you're saying that you're doing? And two, are you actually executing on that? And so that, I think, is very, very powerful. I agree with your point on institutional adoption. I think as this space has moved from retail to institutional capital coming in, that narrative has to change and your communication channel has to change too. With Bitcoin, for a lot of people, it's still one-on-one conversations. We're having those at UTXO. And so as we always have, we have analogies for everything. They may not be perfect, they may not be one-to-one, but Bitcoin is digital gold. All these other types of analogies are really helpful in explaining the value prop of why you want something like Bitcoin within the context of your entire portfolio.
That's awesome, and it transitions me perfectly into my second question, which is, we've seen the digital asset treasury space really boom and then go through different phases, right? And I'd say right now we're in this phase of it used to be all the rage, and then it was a really negative sentiment, and now we're somewhere kind of in between, right? And I want to get your thoughts on understanding, how did we get to this point? Do you think it's because of purely market volatility and kind of the market has adapted and seen digital asset treasuries kind of come in and not be this like hack that it seemed to almost be at some point? Or do you think that the space as a whole has maybe under-communicated like the value proposition and the staying power and the purpose of why digital asset treasuries are important?
For me, I think it's just a natural curve of growth. Things that start with a big hype, take up the market, people over speculate, and so we all know life moves in circles, and and the markets move in sine waves. So, well, almost. And so I think this is just the natural drop of sentiments after the major hype. We should be back again for whatever reasons. I mean, the reasons can be whatever the world thinks they are, but this is not surprising, let's put it that way, because something that is like super connected to the net asset value of the, on the books, is trading at a 3 times NAV or a 2 times NAV is already ridiculous, right? Unless there's, like the previous speaker said, there's a value proposition which is more than just the assets on the book. And we are, of course, looking at DAT 2.0s and DAT 3.0s, as we call them, that are not just adding, tokens to their balance sheet, but also values to the ecosystem, which, of course, makes lines of revenue for the public company, for the company, but also creates more value for the token. So I think that would be a better future for DATs. Everything we have for now is a good start, but we do deserve better.
William?
Yeah, I think Gaurav hit it on the nail, which is this is very, very natural progression. This is not only limited to DATs. It's happened in history across the public markets again and again with all different type of vehicles. Just look at the SPAC boom and bust. Just look at the mining boom in Australia. You can look at the biotech frenzy that happened 36 months ago in biotech on NASDAQ. This always happens, and usually the way these things play out is there is a bit of a growth period, and then that's followed by a period where prices become more muted. And then afterwards what happens generally is that there's a bunch of consolidation, there's a bunch of companies actually delisting, and then eventually there's effectively a few players left. So look, I think this is a very natural progression with any new vehicle, especially ones that that can trade or have that operating leverage of having a price that's above their NAV. And I think the role that it usually plays out in similar thematic.
Yeah, I mean, I think it's important to get back to why this was successful in the first place, right? And I think that narrative and that communication has evolved really since April of last year when MetaPlanet came onto the scene. You know, at the end of the day, a Bitcoin treasury company is meant to relieve some sort of friction, right, in terms of some type of investor getting access to Bitcoin or some sort of tax arbitrage or regulatory arbitrage that you can do through an equity, but you can't do through the digitally native asset itself. And really the big idea is you're moving a scarce digital asset like Bitcoin from digital rails to a wrapper that institutions can now access, whether it's pensions, pools of capital that can't access it directly or can't buy the ETF, can now do it through a corporate wrapper. And so obviously the narrative has evolved and changed across Bitcoin, but then also other digital assets. And I think it's important to say, okay, the reason why this was successful is because it was alleviating some sort of friction in the market. And that's the reason why it exists. And so I think it's important to get back to those fundamentals as we kind of went through this first hype cycle with Bitcoin treasury companies.
Awesome. And in terms of when entering kind of like the DAT 2.0, 3.0 phase of this, do you think that having a strong central figure behind the digital asset treasury is something that is going to have staying power? Is it going to help digital asset treasuries kind of sustain longer term in this new phase of things? Or are we pivoting more so towards getting away from that sole central figure and more getting into what does the company actually run like? What is the utility of the company, et cetera? I'd love to get your thoughts on that.
We're going to the very fundamentals of venture right here, right? Very fundamentals of building a company. Great product is an important vertical to look at and build. Incredible team is, of course, incredibly important. Financial intelligence and placement and excellence, another important sector. And then marketing, go-to-market, central figure falls into that bucket. And so each one of these aspects of a venture, of a startup, of a company has to be managed and tackled independently. I'm not sure Tesla is the best company in the world, but we are all sure that Tesla is the best CMO in the world, right? And so does every other company of Elon. And so, we need the same with DATs. DATs are no exception. You can build a great company. I mean, we have all, I think everybody in the room, most of us in the room, have come through an era where we never knew the CEO of our bank, we never knew the CEO of the company, of the car we were driving, we never knew the CEO of almost anything that we were using in our life, and we simply trusted the brand for it. But now we are living in an era where we actually go and check the history of the founder. If you're using a wellness brand, right, we go and check the history of the founder and his attachment and passion for the tech he's building, and so on and so forth. So we have sort of in the age of information that internet has brought onto us, we have shifted to knowing everything about the company, including the central figure. So I think that's a majority of sales, or let's say a majority of portion of trust that somebody has on a company, which is based on the central figure.
Yeah, so I think you need to have both for sure. Even if you have the best person in the world, without a business model, there's not much he can do, or he or she can do. So I think. Look, I think you need to. The business model is absolutely critical. I think we've spent a lot of time making sure that we have a good business model that's actually sustainable, accretive, can actually compound over time. Having the team is absolutely critical. But I think I would say compared to probably some of the DATs that I've seen, they tend to be very, very driven around how almost, I would say, famous the person is or how they've done in certain things, which I think works, again, I think if you're very focused on that sentiment-driven side of things. But really, I think if you think about trying to find the right person for heading up a company, right, it has to be related to the business model, right? And ideally, they have experience growing that type of business model, executing on that business plan, and actually proving that from a track record perspective. So look, I think you have to have the business model. Without that, even the best person, even Elon Musk, would be sitting there unable to do his magic.
Yeah, obviously you have to have both. I mean, Michael Saylor was our keynote yesterday at the conference, and he spoke several times throughout the rest of it. And after his speeches, he was literally people were rushing the stage almost. It was a little scary is the wrong word, but just there is this attraction to that to that key figure. And it's no different in any other big industry. Everybody knows Jensen from NVIDIA. Everybody knows Zuckerberg from Facebook. Everybody knows Musk from Tesla, right? But yes, you do have to execute. You do have to be able to communicate and sell what you're doing to the broader public. It's important to have both. But I think we're going to continue to have key figures, especially in a very nascent young industry as this, that will continue to drive adoption.
Amazing. And so far in the answers that you guys have provided, there's two kind of interpretations, right? One is we agree that narrative is really important. Number two is the kind of cycle that we're in can also be associated to just the usual financial cycle, right? There was a boom and then now the market's readapting, et cetera. I'd love to get your thoughts on whether or not you think digital asset treasuries specifically should try to keep controlling their narrative, or should they let consistency build their credibility through time? I'd love to get your thoughts on that.
I think I'm missing out on the question. What precisely?
The question being, what is what would take priority in your opinion between controlling your narrative and really pushing into the messaging behind what you're doing and letting the results kind of speak for themselves? So you can see very different approaches, and I'd love to understand what your thoughts are on that.
The reality for now is DATs are the spearhead, of the crypto weapon into the chest of finance, right? And so it is a marketing endeavor primarily. We're trying to get into institutions. We're trying to tap into public liquidity. We're trying to get into capital markets. And we're trying to convince them that, hey, this is the future of finance. This could be a great instrument to invest, or, why is it a great instrument to invest? Because, we have built a $3 trillion asset, which is holding, which is being held purely and simply as the asset of value, right? A store of value. And then there is a smart money on Ethereum, also known as institutional blockchain these days. So essentially, the heart of DATs currently is marketing and getting into capital markets. So I would say more than 50% is dependent on the narrative, on the quality of marketing, on educating capital markets about what DATs and crypto at large stands for and the future value of it.
Yeah, so I think we have to do both. We've been primarily very focused on our business model and making sure the business model is a good one. Our business model, I think, is very, very fundamental from the perspective that what we're trying to do here is we are trying to build almost like a capital recycling business. Take trapped capital and put it to better use. But there's obviously a narrative part to that as well, right? Depending on who you're talking to, you have to go and shape the narrative to them, right? For example, we have a lot of institutional special sits investors, and if you go to them and you start talking about Bitcoin, it just flies off the top of their head. They don't understand that, right? And so there, the story has to be very much around downside protection, about orphan capital, companies that are underperforming and sometimes even in distress, and then really a credit mindset to how you actually not only tell them the story, but also shape the instrument by which they can actually get involved, whether that's from an investment perspective or from a partnership perspective. Yeah, so I think it is a mix of both, for sure.
I think we're at the show me stage, right? I think the narrative and the stories have been out there. People have gotten really hurt over the last 4 months in this space, and now it's to the point where it's like, okay, let's see you execute, let's see consistency in what you're doing, and show me that you can execute as a treasury company or as a DAT. and what does that look like over the next year, right? And so, yes, story is important, narrative is important, but I think we're at the point now where investors want to see some execution and some consistency in the business model.
Awesome. And in the age of like social media and instant reactions, especially with bridging Web3 and traditional finance with, we all know crypto Twitter is the wild, wild west, and those practices in that kind of space operates in its own parallel universe, and all of a sudden you need to be messaging in a NASDAQ compliant way, right? I know that's a challenge for a lot of companies that are getting to that space. I'd love to get your thoughts on finding that balance. I think like being able to echo the sentiment from the Web3 side to like bridge and get into mass adoption, et cetera, while also understanding that we need to also reassure the TradFi world that this isn't just a fad, this isn't just a hack that's going to disappear overnight, and that there's staying power here.
Pay your counsel a retainer for your media audit, period. That's what I've done. That's what everybody should do. Pay your counsel, a retainer. Everything that you shoot out goes through them, and you're safe. Don't use WhatsApp. If you do, only do one-time, audio messages, or use a privacy-centric app. I don't have better suggestions.
I think definitely you have to go and look at things before you send them out. You have to be very careful about messaging. Everything that goes online, most of that will actually stay there permanently. So you've got to be very careful what you push out, especially if it goes to a third-party site. And I think perception obviously has a huge impact on how you can actually deliver results in the future, right? So I think PR has probably been one place where we've probably focused a little less in the last few weeks, or last few months, but now starting to really make that a core part of our business.
Yeah, I mean, I really think it shows the maturation of moving crypto and Bitcoin from a more retail-driven asset to an institutional asset in terms of growing up and how you message and the types of compliance you have around that messaging. I also think that most institutional investors don't go on X or Twitter or any of these other social media sites. So in terms of the relevancy, it's probably a lot less, and you're just opening yourself up to a bunch of liability at the same time. And so you got to go to the channels of where these institutional types are, and that's face-to-face meetings, right? Doing things the right way. So.
Yeah, and I would also say a lot of the institutions, they have their own processes in place, right? Like when you're talking to an institution, the first thing they'll have to do is clear conflicts and make sure you're not sending any material non-public information. So there's an entire process around that you've got to be aware of.
Absolutely. So this to kind of wrap up, I want to project a bit forward in how you guys see two things. Number one is it feels like DATs and digital asset treasuries were a real wave of the main narrative around this wave of institutional adoption, right? So my first question is, what do you think the state of digital asset treasuries looks like in 6 months, in a year? And then secondly, do you think this is going to be the continuation of the same wave that will bring on more institutional adoption, or will there be a separate narrative that kind of sticks out that you see being another driver of that bridge between Web3 and traditional finance over the next year, let's say?
I'm going to hold on to the title of this panel, and I'm going to hold on to the narrative that I've been holding on for a year. I made a tweet, I think 4 months ago. I'm not surprised you have a DAT. I'm surprised you don't. So I think DAT is the eventual evolution of a corporate structure around a token or a decentralized business model that is eager to deal with the centralized world that we live in. And so a public company brings more than necessary validation to the entity, which we've been missing largely for financial operations. We all understand, finance is the killer app of crypto. And so that way, I think we'll keep progressing on DATs, more and more DATs focused on better business models, based on the business model of the token or the decentralized ecosystem of the project, will keep flourishing. That's the DAT 3.0 narrative. On the other side, again, these are just like very flimsy Twitter narratives. You can totally disagree to them. I didn't frame them. But the DAT 2.0 narrative, which is based on DeFi yields, I think there's no better, so far, no better innovation found in typical finance, in traditional finance for the last 20 years than this. So there'll be more fixed income products, derivatives, liquidity products, everything totally built on crypto rails and crypto ecosystems and infrastructure. So I don't see a reason of DATs coming to an end. I'll quickly pull up a brilliant line that he said. Yes, there are trends that go up and down, but he mentioned the biotech trend on NASDAQ, but thank God it happened because now we have the shells for DATs. So some trends actually don't come back and they were just there to die. So DATs are probably better than trend. They are a shift in finance, and so they'll keep growing altogether.
Yeah, so my view for most of these DATs is that they'll effectively decay slowly over time. I don't think much will actually happen, assuming that there's no big jump in crypto prices. I think my view is I don't think the yield generally for me is sufficient to get a big boost in price. I mean, most yields, if you're talking about real yields, are sub 10%, and anything above sub 10% tends to be very inflationary. I think, and therefore I think the reality is that most of them will just effectively stagnate. They'll have a drag based on the OPEX, which tends to be the management salaries plus a few million of the listing costs. And every year, I think they'll just erode slowly year by year. I think on the flip side, I think most DATs aren't as risky as I would say like Moody's or S&P or MSCI points it out to be. I mean, these are liquid NAV where you don't use leverage normally, and where there's not much in terms of OPEX. And so the price will be a bit volatile depending on the underlying asset that they hold, but generally I think I don't really see them trading much materially off below what they are today.
I'm going to take the complete other side of that, specifically with Bitcoin treasury companies. I think it's important to think about strategy. Strategy is a half decade into their Bitcoin accumulation process. They've gone from 0 Bitcoin in 2020 to 660,000 Bitcoin today. They just bought $1 billion worth of Bitcoin 2 days ago. They have several $1 billion worth of prefs and are now starting to access fixed income and credit markets. And I think that's really going to be the big narrative for next year, is which companies can go up the capital structure, can offer fixed income or credit-like products for investors who don't want to have that volatility of Bitcoin. And so we all know strategy is going to remain by far the biggest, largest, but there's going to be room for others to have a crack at that. And we have was a $300 trillion global fixed income market. I mean, we're just getting started with Bitcoin accessing traditional rails. And so I think this is not a trade for us. I know there's been, you look at the year, it looks like a trade, but I think there are going to be a few companies, especially on the Bitcoin side, that are going to be around for 10, 20, 30 plus years and are going to significantly outperform Bitcoin because of what they're accessing from a traditional rail perspective.
Amazing. Thank you, gentlemen. Thank you very much for your insights and this really cool discussion. Hopefully you all enjoyed it, and thank you very much for taking the time.